This is our urgent market update for Friday, the 13th of October. Now, we've been waiting a few days to see how these markets are going to play out. And we just want to focus a little bit more on the importance that patience can play for us traders. We were able to benefit from some high probability trading opportunities post this bullish pullback that we've been experiencing over the last 4 days. So I want to explain it in a little bit more detail, just to show how if you can, if you know what you're trying to do, what you're trying to achieve, what sort of returns you're looking for, you can strategize really quite nicely. But the importance of patience can't be underestimated. Okay, welcome. Thanks for joining us for this short urgent market update video. Let's get straight into it then. We'll start as we always do with our risk warning. Just take a brief moment to familiarize yourself with our risk warning currently up on screen. Do feel free to pause if you need to. And let's get straight into it then. So what we want to draw your attention to, let's show you the charts firstly. So let's just take the US indices, the S&P 500. And let's take it back a little bit. We just go back a step. In fact, we go back a little bit more. We've been in a clearly defined bear market for some period of time. And something very significant happened on Friday. I want to draw your attention to this little, what became a really bullish reversal signal off the back of these lows. Now, this is the first part of this equation. What happened, and more importantly, why did it happen? There is a conclusion to be drawn here. So if we go back to this, and this is Friday afternoon, and then we bring up the news calendar. And if we just go back to last Friday's event, I just want to share with you exactly what in our opinion, what we witnessed last Friday. And it is Friday, the 6th of October, it was these unemployment numbers. So we had a massive surprise to the upside as far as unemployment is concerned in the US. That was always likely to be an inflationary force for the US economy. And what we would have expected and what we saw for the best part of an hour and a half was some strong selling, and we expected that to continue. Now, something else then, after that hour and a half of strong selling, something very, very significant happened. But just to clarify, this was a real positive news event for the US economy, which we were expecting to have a negative impact on the markets. And the reason being, if you've got inflationary forces in there, it really implies that the Fed are likely to keep rates for longer and hold rates up at sort of 5.5%, 6%, and maybe actually go through a period of further rate hikes. And all of this is more likely if the jobs market still remains rock solid. So we're expecting a figure of 171,000 jobs, and we saw almost double that figure. So we were very, very bearish that market, but I want to show you what actually happened in reality. And also just to comment on average hourly earnings, you know, we are seeing growth, although not as much as was anticipated, but still people's wages are growing in line with these inflation numbers. And all of that is ultimately inflationary, and it's not really what the Fed want to see with these rate hikes. They want to see a bit of demand destruction. They want to bring about, you know, a fairly soft landing type recession. If they could possibly do it, it just impacts demand. It brings those prices down sustainably over the longer term. That's really what their remit is: price stability and unemployment. So unemployment, the box is ticked. We're very, very strong employment numbers. The problem is the inflation side of the equation. So then, taking you back to the charts, this is effectively what happened. We had that hour and a half of really strong selling, and then we saw this reversal, and it wasn't a normal reversal. It blew the recent price action out of the water. So we've been drifting. This is an hourly time frame, and we've been drifting sideways for 27th up to the 6th for the best part of a week, maybe 6 or 7 trading days. We really didn't make, we were grinding lower, but we didn't make too much progress. But then on Friday, if we zoom in now, what you'll see is a really, really strong reversal. So we think this is I suppose, this is what price manipulation does. Those that can manipulate markets clearly made the decision to do that. There was some excessive buying. And then over the weekend, we experienced this gap. So you'd expect this gap to fill, which it did eventually. And we were talking about that Monday morning. Would we actually close this gap? And our anticipation was that we would. We did go on to do that. And then what it gave is the opportunity for buyers to start jumping in and provide additional upside moves. So, and we had to be a little bit patient on this side because the overall and overwhelming fundamentals for us are a little bit more bearish. But we keep seeing this relentless positivity, this relentless sort of periods of strong buying in the face of really, really negative market fundamentals. And that's really where we're at with this market. And just wanted to just explain, you can see the vast majority of these moves and where you see the major upside moves are relatively short periods of time. You know, it's not like we are making progress. We're going through long periods of sideways moving patterns. And this is often how these markets can manifest themselves. But you can see the overall trajectory is actually still higher until something happened yesterday. I want to draw your attention to that event. I want you to just focus in on this area here in terms of what actually happened to create this. Because if we do some more technical analysis, we have an upward trend line cutting through these markets, providing a little bit of support and resistance. Prices were kind of bouncing up and down. And then something very, very significant happened around this little area in here. And this is where patience come in. This is where our trade plan comes in quite nicely, because we were waiting for the market to roll over to the downside. Now, not just technically, we also wanted it to roll over to the downside from a fundamental perspective. So now let me fast forward. All of last week all of this week just gone. It's kind of stuttered in places. On Wednesday, we had higher than expected PPI, so the input costs are going up, and this is all inflationary. And yesterday we saw a very, very important, this is yesterday, Thursday the 12th, and we saw CPI headline rates come in above expectations. Again, the reason why that's important is the Fed are anticipating this inflation rate to come down. What we're seeing through the figures, for the heavily manipulated figures in themselves, they're actually seeing a bit of a, let's just say that they're remaining incredibly sticky. And that just means the Fed probably need to keep these rates up at higher levels for longer. And the market is struggling to adjust to that reality. So if we go back to the charts now, we've been patient through this whole period for the first 3 days, 3.5 days. And we thought we might get an opportunity with the PPI. This was our opportunity to start selling the PPI. But we just bounced off the moving average, and then we started to rally. So clearly, Wednesday was not the time to start pulling the trigger, but then something more important happened. We pulled back, and this was the time here when prices were beginning to make new highs. And we saw a really consistent rollover to the downside. And this was driven by higher than expected inflation. Some of the motivations to actually start selling at these lower prices still exist, but at a much higher price, up at the 43.69, 43.89 in this case. So we've got an opportunity, because we've been super patient through this bit of buying, which didn't really stack up. We had a confirmed bearish move across the market fundamentals. The sentiment started to roll over to the downside, and we started to see the technicals starting to follow suit. Whoops. So yeah, we started to see the technicals begin to follow suit. So our overall bias is still to the downside. We still think there's plenty more further opportunity to the downside. We're looking to at least see another big move lower. So we wanted to just say, sometimes the markets don't quite stack up the way you would like them, where you don't get any sort of coherent view of quite bullish market conditions, bullish fundamentals, bullish sentiment. Sometimes you don't get that, but you do get bullish technicals, and that's what we've been seeing. So the fact that we were able to be patient allows us now to get in at these highs and place our stop losses at momentum highs with the potential for further downside. And we'll see now over the coming trading days exactly how that's likely to play out. And we're seeing exactly the same situation across many of these markets where we got our stop losses at multiple highs. And that's exactly how we want to try and trade these markets. But just to say that the trigger, we needed to wait and be very, very patient for that bearish signal to start filtering through. And then we want to see the opportunity reveal itself, which it clearly did yesterday afternoon. So we're in these markets for further downside. We're currently getting a little bit of a pullback off the lows, but our bias is still very much lower. So hopefully this is just a demonstration in terms of how important patience can be. Sometimes you just don't quite get the right dynamics to be able to make really good, solid, high probability trades. But then when things begin to change, and they always change, you can then adapt accordingly. And that's really what trading is about in real terms. Okay, just to talk about the narrative, just before I let you go, the markets, we've been in this kind of dovish narrative for the last 3 or 4 days with this sort of bullish upside move. We're very much in the hawkish Fed camp, and sometimes the markets realize and take note of that sort of hawkish stance, and other days like the first three and a half days of the week really didn't, and just ignored this sort of downward pressure. So if you have an understanding, if you plan your trades, if you do your analysis and just go with your analysis, what your analysis is telling you, you do make for a happier trader and a more profitable trader. Okay, then on that note, guys, thanks so much for joining us. Just to let you know, if you have any questions about anything covered, this is it's a complicated, constantly evolving topic. So I appreciate you may have additional questions. If so, do feel free to email us at support@thelivestrading.com and we'll get back to you as soon as we can. So on that note, thank you very much for joining us. Do stay tuned for our next video. And just to let you know, we trade these markets live every day from 7:30 every single morning for our trade plan session, about 15-20 minutes before the trading day begins at 8 a.m. for us for the European trading session. And then we're back at lunchtime, 12:45 p.m. for the US trading cash open. And these are all UK times, by the way, so just find your relevant time locally to you. For more information, just go to thelivestrading.com and we'll be happy to answer any questions and engage with you there. Great stuff, guys. Thanks for joining us. We'll see you next time. Bye for now.